Hey everybody, welcome back. Well, you have a huge day tomorrow, but we had a pretty big day today. We can see we got right over that 4,800 level that we were talking about. You have a really nice pattern here. 1, 2, 3. So you have a little doji here. You flip that right over that 12. We've been talking about this 12 SMA and how we had to flip it. And you can see that we are back above the 12 SMA for the first time all year long. So I think that's a pretty big deal, especially going in the CPI. And you can see we really weren't even able to stay below that 22. Again, for those that are newer, I use a 12, a 22, and a 55. You should use whatever you're comfortable with. You can see the RSI did great. We held that 50, and now you're curling back up. And you actually saw rotation in the several sectors today, especially after the 1 o'clock 10-year. So we're going to talk about that as well. But this is looking pretty good, and we should be pretty happy about the way that it's acting, that's for sure. We definitely have to talk about CPI, what to expect tomorrow. What is JP Morgan looking for? Why is it so important? Which way are they leaning? There's a lot to get into here, but one of the core things that we should probably focus on is, I'm just going to pull up these clouds for a second. We're going to talk about this and get rid of the 12 to 55, and let's get rid of the RSI as well. So what we could see already is, for those that are newer, this is a private cloud system that I use, and I just share it with everybody as far as when the flip happens. So here's the flip on the hourly, and you can see right here, let's lock these down. You can see right here where it started, and it flipped from green to yellow, and that usually tells me to yellow is cautious, green means go. And you can see right here that it's been pretty accurate so far. I've been using this for a while. So, and these are just secondary indicators, but you can see how we're acting, and really all they're doing is ripping you up, consolidated, ripping you up, retest, then consolidation. So it's some nice movement going into what we're expecting CPI, which is supposed to be a pretty volatile number. There's a couple things that we should focus on there as far as what's going on with crude oil. Crude oil is usually my go-to with gasoline on what's going to happen tomorrow. So we will go through that as well in some detail, but also NQ in here. Let's just talk about this while we're here. Nasdaq, you can see the yellow right in here, and then when we flip to green, so we can see the same exact thing right there, yellow, and then we flip to green. What happens when you get to the green cloud? It tends to hold. It's exactly what you want to see. It doesn't really get any clearer of a picture for me. I would have been way more aggressive going into the close with the way these are acting had CPI not been tomorrow. CPI is a crapshoot. It always is. You plan, you try to figure it out. You look at PCE, but PCE and CPI are completely different. I will not bore everybody and go through that now. We might do it this Saturday and walk through that, the differences in CPI and PCE if people are interested. You didn't really have to worry about these differences so much until this Fed started looking at PCE a little bit more. But you see RTY is just, it's really the laggard out of all of them, isn't it? You can see how you're just dragging here. So just deal with it. Now, I apologize for the voice. Allergies are really bad today for some reason. At TNX, I always look at this as well. I just want to know what's going on the hourly, and you can see this. Like, as someone likes to say, it's absolutely glaring. Apparently, I say that a lot to the point people want T-shirts. But look when we flipped. Yellow, and now yield is rising. Look where the green is. So we flipped. And this is a concern. But what I do like about this is it seems to be equilibrium, right? So we seem to be getting to a point here where the bond market and the stock market have hit an equilibrium where ES is going up, even though yield is essentially at this point going sideways. So yield is going sideways and ES is still going up. So maybe we hit an equilibrium on the market, and maybe we're just going to rotate and going to go from there. I mean, it seems to be some level of rotation today. And I think that's pretty important for us to pay attention to. Even the VIX going into this, and we can get rid of these clouds now, but even the VIX going into this, we didn't really do a whole heck of a lot there, did we? What did the VIX do? I mean, it actually sold down after that information hit at 1 o'clock. Information in question is just the TNX. And what happened there? Let's talk about that and get into the line and just really view this. You know what? Let's get into a 1 minute because that'll really tell the story a little bit cleaner. And then what we'll do is we'll get rid of this 55, and then we'll just drop in right here. We'll drop in the SPY, and we'll drop in the Qs, and we could drop in the dollar. And what we'll do is we'll just mark off from the 1 o'clock bond auction and see if we can figure out what happened. So we could see right there at 1 o'clock, okay, well, what happened today? So yield went higher, actually. And look what happened here. As yield went higher, the equity markets went higher. So even though we went higher, the bond market went higher. So this is a correlation you usually don't see. And the dollar actually kind of went down to dropped. If you mark the dollar from here, the dollar actually dropped. So it's really kind of interesting, isn't it? So is this correlation still something we have to pay attention to, or did we find that equilibrium? I'm starting to lean towards the fact that we found that equilibrium. Now, there's a couple different ways to look and say, okay, did we really find that equilibrium? So one of those things you could do is just take the 10-year and then just divide it by the SPY and see if that can give you any kind of read. And it seems to be giving you one. Now, how are you going to get an equilibrium out of that? Well, first, let's get rid of this line. But what this will do is it'll just tell you that you got a baseline. And you can see you have a baseline. So So this is telling you for the past 2 days, yeah, you're developing an equilibrium in here, aren't you? So you didn't always have an equilibrium, right? See how you were coming down and then you were going down sideways and then you were lifting up on this and 10-year was doing okay. But now what you have is, since you have about January 2nd, you really haven't gone anywhere on this. Basically, what this is the 10-year yield in performance in regards to the S&P. And what's this telling you? It's really not gone anywhere. So no matter what yield's done, you're basically in line. Well, that's kind of interesting, isn't it? So maybe that's something that we are starting to get away from, or something that we're setting up for. Either way, it's a data point, and I wouldn't sleep on it. I think it's important. And I think there's a couple other data points why I'm here that we should probably focus on. Let's just dig into this. And I appreciate all your comments about don't worry about the editing, just get to it. It really makes my life way, way easier, especially when it comes to editing and just getting the content out. And there's a ton to get over today, or go over today. We get rid of the pre and the post. Now, what's that thing that's lit up right there? Let's just drop this down to a 1. This is what happened today at 1 o'clock. And what I did was I just drew a line from 1 o'clock over, and I can extend this out. And what I was showing people in the community was, hey, by the way, this is the 1 o'clock. So you could come here and you could mark any sector that you want and then determine which sectors actually went up from that time. There's another way you can do it too, and you can just drop it from here over, right? So you bring it all the way back over to here, that 1 o'clock level, and go, well, who outperformed since 1 o'clock? XBI again, and financials, and energy. So you had like a mismatch in there, didn't you? Like, you really did. You had a mismatch. But at the end of the day, what prevailed? XBI again. Say what you want about them selling down today, but at the end of the day, here we are again. And it's something for us to pay attention to again tomorrow. Tomorrow is the last day of the JP Morgan conference, and usually the last day when these people are all hanging out in San Francisco where these deals get done. They get done Thursday or Friday. The last day is usually when deals get done. So I would be surprised to see more M&A deals tomorrow, but you never know how that's going to go. But I think you should pay attention to this, and I certainly think you should be paying attention to the sectors and how those sectors play out and go from there. But that's neither here nor there. There's some other things that we really need to get into. So the first thing is CPI, and why is it so important? Now, CPI, I'm using trading economics. You can use whatever you would like to utilize, but I'm using trading economics in here. And from my perspective, I knew that this was going to be kind of a wonky day, right? Trading because of CPI. So I'll walk through how to trade days like this. Basically, what you're doing is you're getting out when the getting's good. You're doing very, very quick trades. If I have time, I'll walk through a couple of them that we did today that were fairly successful. And there's definitely one sector that I think you should be watching tomorrow, because I don't know what the next catalyst is for the sector. But I just want to remind myself before I go through this. So here we are. Okay. Previous 0.3, consensus 0.3. That's what we're looking for. This is our first data point in 24 since rates have dropped and mortgage rates have dropped. Is that going to affect this? What else is going on in the Red Sea? So we have what? Oil. Did oil drop? Because oil dropped in October and November. Did oil drop this month? No, it's basically flat. How about gas? Basically flat. So this is going to be a really interesting number, to say the least, for us to watch and see how it does. Now, I would watch this very closely. I would tell you what they're really focused on is this 0.3 number. And really what they're saying is they're looking at it and saying, okay, I'll show you what JP Morgan's saying in a minute here, but they're saying that like there's a 50-50 chance it comes in line. It's not a lot, but they break it down per quadrant and percentages, and it's worth paying attention to. But this is a huge number for us, and I have to explain why. Now, let's walk through. What else do you know? You know this is a big number. You know that the market's going to go down, and you know the market's going to go up, depending upon this number, right? If this number's lower, market's going to do what? Go up. If this number's higher, right? Market's going to go down. That is what is expected to happen. So the first thing you want to do is make sure you know what's expected. Second, you want to see if it's actually doing what it's supposed to do. After we have that data point, you're going to want to watch these 11:30 auctions. Okay? These 11:30 auctions are going to tell you everything. If they are hyper aggressive and the market takes another level either down or up at 11:30, that is going to be extremely helpful to you. 1:30, right? Now you're at the long end of the tail of the dragon. Okay, you're on the long end of the bond. You're going to want to watch this at 1 o'clock. Okay, is this going to? Well, we know what this is going to do, but is this going to be the same as here? Are they buying short term and they're going to dump long, or is it vice versa? And you'll be able to determine this in the market. If this auction is weak, does the market go up anyway? Just like we just showed you with happenings with TNX. These are the things you have to pay attention to tomorrow. And just FYI, Friday you're going into PPI. If CPI is decent and good, PPI is usually decent and good. Think about it. This is what we pay. This is what corporations pay. You think corporations are going to pay more and not make you pay more? I mean, just think about it. Think about it from that perspective, and it'll save yourself a tremendous amount of aggravation. So this is what you want to look for. This is why it's important. This is Trading Economics Calendar. They come out almost instantaneously. This is free. It is just as good as any service that I have, no matter how expensive. They come out and they tell you exactly what's going on. All right. Second site you want to pay attention to and why this is so important. This is CME Group. You can see it right here. CME Markets Interest Rate Fed Tool Watch. It tells you when the next Fed meeting is, but most importantly, most of you guys are familiar with this tool, but let's get into why this is so important. Okay, you have a 4.7% chance of them cutting rates on the 31st. How did I get there? That's the current rate, 525, 550. That's your target. This is stating that you have a 95% chance of staying there, 4% chance of it changing. Let's look at what happened. So this will tell you a month ago that you were at a 4% chance, then we went to a 9% chance, now you're at a 5% chance and a 4.7% chance. Should CPI, by some reason, plummet tomorrow, this will go up. If this goes up, equities will go up, especially since we've now found an equilibrium in the bond market. See how the equilibrium that we just determined is going to help us tomorrow in trading equities? That is what we want to focus on. Then we can always go out and look at March or May or June, but for now, that's what we want to focus on. Okay, so that's why the data is so important. Now, I will go over this tomorrow pre-market, and yes, we will start on time tomorrow pre-market, I promise. And what I want to do, I'm laughing because a lot of people tease me because sometimes I start a little bit late. But this will tell you on a percentage chance on core what JP Morgan is thinking. And they'll tell you what type of reaction to expect. So if we're going to look at this, there's a 5% chance you come out at 4 or higher. Okay, that's what they're saying. If you come in there, what does that tell you? Okay, that tells you that you're going to lose 1.5 to 2.5%. So how is this helpful? You see its core CPI of 0.4, and you know that JP Morgan is telling their institutional clients, if you see 0.4, market's going to sell down. You would know immediately that you want to start shorting, right? If you're an active trader, or expect equities to sell down and maybe you lighten up positions that you were concerned about. Okay, that's how this gives you an advantage, especially if you know that they're only thinking a 5% chance of that. 25% chance that you're between 3 and 4. If you're in between this range, which is really what they're looking for, right? That's going to put us at 75 to 25 basis points. Chance here, core, I think the number that they're really looking for is like 0.26. So it kind of really splits the hairs here on this 0.3 here, because I think the number actually dials down to 2.26 is what they're really looking for. So some people are going to say 0.2, some people are going to say 0.3, but I think the number is 0.26. They go out to the 100th. But all right, so you have a 45% chance, 50 basis points. So the meat of the move is where? Right in here. Okay, they're saying 75 basis points up, 1% down. Either one can happen at that 3% level, right? But if you come in at 2 or lower, okay, you're going up $1 or $1.25, 1.5%. If you are below 0.1, let's say you see a 0 tomorrow, right? As I like to say it, if you see that, you'll hear me in the community just say buy everything. So in other words, if you come in core CPI below that, then that's how you have to view it. Now, you might want to screenshot that. I will walk through it tomorrow. We will start before 8:30 tomorrow, but you might want to screenshot that so that you have it. All right, so now we have our map. Now, this is one of the things I like to do for everybody before that data comes out, and I'm just going to leave this in line form right now. So this is crude oil. And what we've found out is that this has worked exceptionally well for us throughout the year. I've been doing this for over probably 10, 15 years doing it this way. Been trading over 20, but I've probably about over a decade I've been looking at it this way. If I wanted to know what CPI was going to be or have an estimate, I always looked at crude and gasoline, because even if you're looking X energy and X food, everything is gasoline. You have rent, they have to come and fix your place, right? They have to come fix your place, someone's going to have to drive there. If they're not going to have to drive there, they're going to have to pay somebody to live there, right? That person's going to have heat. No matter how you look at it, everything is tied to energy. It's silly to me that they even break it out. They shouldn't even break it out. But if you came here and looked at October 1st and you said to the 31st and you came across to that date, you're going to see that during that period of time, you were down about 6%. And then you come into November. And now the reason I'm showing you this is because we've had these numbers dropping, right? 8%. Okay. And then you come here and now you look and you go November to now, right? And now you're here. All right. So you are in a point here where you could say, yeah, you are down, but is it down enough? We're going to have to see. Is it down enough that it's going to affect the market? If we look at gasoline futures, you're going to see something here that I think is really kind of telling. You can tell by the drop here to here. I'm not going to go through it all, 7%. And you can see here we were basically negligible here, right? If we mark off these levels, you're kind of down. You're down about 2-3%. Is it enough? Is this enough? And then the other flip side of this, if you remember that, we're looking at a third of this being housing. Well, mortgage rates are now dropping, right? So if mortgage rates are dropping, that's a whole other issue that we're going to have to talk about. And why is that an issue? Because if people are going to buy houses, then is that going to put us in a position where rents are going to drop? Did rents drop because they bought houses? Because none of the data that I'm seeing is showing that rents dropped. As a matter of fact, I'm seeing them actually rise in certain cities. So you look at the home builders, and that certainly doesn't look like it's got any give with it. Linear just raised their dividend. I think KBH came out tonight and just didn't do very well, right? So, and they're down a little bit tonight. So that's where we're at with CPI. I'm better off utilizing our time going through that than pointing at the obvious and then going, look, NVIDIA hit a new high today. I don't really know how that adds a tremendous amount of value out there. If I clean up all my nonsense for a second, we are still long this in the community. We've done exceptionally well with it. I still have calls on it. Very little for me to say here. This is a 7-month base. You're breaking out of it. For those that are thinking it's, quote, expensive here, I'm going to give you an exercise to do. And maybe you're going to do it, or maybe you're just going to tell me it's expensive and do nothing. But go and tell me what the PE was of the stock, okay, before this happened. Okay, before this happened, what was the PE of the stock here? Go tell me what the PE of the stock is right now. And then tell me, is the PE higher or lower? Now, I see where the stock is. Just tell me if the PE is higher or lower. You can put it in the community below. Just let me know. Curious. You can use forward or you could use rolling 12, whatever you want to use, and let me know. I already know the answer. I think you'll be pretty surprised when you take a look at it yourself. I think you'll be very surprised. A lot of people think that the stock actually got more expensive, and I'm kind of letting it out of the bag there. But do the math. You'll be absolutely shocked by it. A couple of things that I would pay attention to that I did note today: cloud stocks. You're starting to see that rotation. 23 is still an issue, but look at Microsoft. Look at this trade today. What a monster! Absolute monster trade heading to that high. That right up here where you rejected, but absolute monster trade today. Absolute monster. It just kept on going. And look at crowd. I mean, these names are they're just running. Now, do these continue tomorrow? I would be looking at these software names tomorrow. The amount of money that was coming into them was staggering. You saw it with Net as well. These are all areas and all names that I would be looking at. You're going to have to see what CPI does, because you're really in that area right now where I'm not going to bring out the stool for time's sake, but you know where I'm going with this. Everything is going to be predicated on that and interest rates. Right? And so we're going to mark off that 830 bar as we always do pre-market so we can get a good setup and determine what's going on out there. But overall, to me, the market held very, very nicely today. On these kinds of days, I like to do a lot of scalping because I just don't want to be building positions into it. And there were tons of names. The one sector that I really think you have to watch tomorrow, guys, is I really think you have to watch these. I really do think you have to watch what's going on with these crypto names. I really think you should be paying attention to them in like pretty good detail, like the Maras of the world. I don't really know what your driver is now. Is your driver that you got another ETF? Like what's the driver for all these names? I don't get it. And technically these stocks look like they're absolute disasters. I shorted this today, did exceptionally well with it. I'm already out, but to me, these things just look like they're setting up to roll. It looks like you're starting to break down here, pretty technical. So you're going to want to watch these, but I would strongly suggest you watch this. Remember, JP Morgan goes again tomorrow. Tomorrow is the last day. So you're going to have a whole group of names that you're going to want to watch. I would strongly suggest that you look at those names and go through them and spend some time with them. There's a lot of names out there, big or small. This one was up 33% today. This one was up 13% today. I mean, I know they're like these little guys, and you're like, oh, well, I don't really want to play those. It doesn't really matter if you start going through some of these names previously from the day before. SANA, this thing was up 40% today. Like some of these names that are in that group, they are just absolutely rocking. And that's not to mention that, CYTK and that buyout deal was the other day. So you really do still want to pay attention to these names. Look at this SRPT and how that did. What happened? They presented. When did they present, right? So they presented on Monday, and then you can see what happened after hours when you came in on Tuesday. So you have a whole list of names, not a ton, but you have a whole list of names that are presenting tomorrow, like CCCC. We have guys in the room who've been playing this thing since $2. I haven't, but these kinds of names, they're all setting up to look like they're going to move higher, and you might want to take a look at them tomorrow. That's it.